We have to do merger question 11 now. This sum is on demerger. The chapter name as per ICI study material is merger, acquisition and reconstruction. So that we have to do one sum even on if you can recall internal reconstruction. Yeah, demerger is also one form of reconstitution of your business. Earlier it was A Limited, which is now split into two part. One part will continue as A Limited, another, as they call it, spin off. You create another entity. I think the other day I gave you this example. Vedanta Limited got split into five: steel, aluminum. They appointed five different CEOs, CFOs. Announcement was done almost last year, October 2023, and it's not a one step job. You have to change a lot of things, starting from creating five different legal entities to books of accounts to separating the employees, assets, logos, trademarks, copyrights. There's so many things, correct? So it is still in process, by the way. We are now in November 24. The announcement was made almost 12 months back that shareholders of Vedanta holding one share, you will hold that one share, continue to hold that one share, but you will also be allotted one share of all five small companies. Okay, Vedanta, steel, aluminum, zinc, and so on. Announcement is made, decision is made, but then implementation will not happen that easily because there are so many uh, company law factors, there's so many Ind AS issues, audit issues in the mid of the year. It is not easy to uh, you know split the company into five. Some people even use the term spin off, by the way. Such one question is merger 11. Read. Here the dates are very important. Go very slow. The following information is related to Fortune India Limited having two divisions: Pharma division, FMCG division. Paid up share capital of Fortune India Limited is 3000 lakh equity shares of 1 each. Fortune India Limited decided to underline demerge pharma division, which means the company will continue, only pharma division will now become a separate legal entity, and they have already decided the name. It's called Fortune Pharma Limited with effect from 1/4/2005. Details of dates are extremely important. Underline this, and if you want to make a note of what I'm going to say, do it. Details of Fortune India as on 31/3/2005 and Fortune Pharma on 1/4/2005 are given. So can I understand it this way? This Fortune India data is before demerger. All okay. This 1/4/2005, which is Fortune Pharma, is after demerger, which means, listen before you make a note, this Fortune Pharma numbers that they have given is all on 1/4/2005, and these numbers are on 31/3/2005. That means out of this numbers only, something is split and you have created a separate legal entity the immediate next day. Correct? I repeat, on 31/3, it was a single company. They had a fixed asset of 20400. On 1/4/2005, you did this demerger. Out of 20400 itself, you have separated 7740. That means once the separation is done, the Fortune India will not own 20400. It will own 20400 minus 7740. 7740 will be with Fortune Pharma, and Fortune India will have the balance amount. Able to follow? Dates are important. These numbers, see this, Fortune India details are before demerger, whereas Fortune Pharma details are after demerger, because demerger was on 1/4/2005. That means this 7740 was part of this 20400. Same way everything. This current asset 8800 was part of 30,200. Okay. In textbook itself, underline and make a note. In textbook itself, make a note. This is before demerger. and this is after demerger. Those who want, tell me this is as on 31/3/2005. This is as on 1/4/2005. Yes. Please read the first line of the question again. This company had two divisions, FMCG and pharma. Now, if you create separate legal entity for pharma from tomorrow, this Fortune India is simply Fortune India FMCG company. But they haven't changed their own name. They said we will continue to be called as Fortune India, but we will be into only FMCG wing. Our pharma will now be called a separate legal entity. Till this is okay. Continue. Here you have a extract of balance sheet, actually secured loan, unsecured loan, current liability, FA, investment, current asset, loans, deferred tax. Obviously extract because you don't have share capital, reserves, etc. Basic details are given. Important sentence. Board of directors of the company have decided to issue necessary equity shares of Fortune Pharma Limited of 1 rupee each, underline, without any consideration to the shareholders of Fortune India Limited. That means, suppose there was Mr. A who was holding one share of erstwhile company Fortune India, he will be allotted a share of 1 rupee each without any consideration. That means he will not have to pay any money. This is exactly what I told you 5 minutes back. If I was a shareholder of Vedanta Resources, they said you will be allotted one share of Vedanta Steel, one Vedanta Aluminium, and so on, Vedanta Zinc, and so on, without any consideration. That means that shareholder A, B, C, D, E, F, G, H, they do not have to pay any money because they already paid, by the way. Out of that itself, we are splitting this into two parts. It's not that you're creating a new company. Your own big company now will have two separate parts. Therefore, you will have to allot them shares. Continue. By the way, after demerger, will Fortune India Limited continue? After demerger, will Fortune India Limited continue? Do not get confused. This sentence, Fortune Pharma is issuing shares to whom? Fortune India Limited or shareholders of Fortune India Limited? Shareholders of Fortune India Limited. Remember, PAN number of the company, PAN number of the shareholders is different. So A, B, C, D, E, F, G, H, those people who are holding shares in Fortune India, they will be the shareholders of this company. This Fortune India will not get the shares. Hope this is very clear. Continue. For that purpose, following points are to be considered. Number one, transfer of assets and liabilities at book value. That means they're not doing any revaluation. So when you have to work out net asset taken over by a newly created company, you simply have to add the numbers from balance sheet as it is. But normally what happens, this is not the case. They will do revaluation, land and building, plant machinery, inventory, debtor, all of that. They haven't given. Therefore, we just take the book value as is. Second, estimated profit for the year 2005-6 is, I want you to answer this, 11400 lakhs for Fortune India Limited. Is it pharma plus FMCG or only FMCG? Read properly, see the dates properly. They are talking about which year? 2005-6. 2005-6, you will not have pharma division. That means this should be understood as pure FMCG income. Now those are thinking, where is FMCG coming from? I read it twice already. Company had both pharma and FMCG. Pharma is now a separate entity. Once you demerge, you will continue to be only FMCG company. If you want, here make a note. Pure FMCG. Correct. And this, look at the year 5-6, and you're doing it on the first day 1/4/2005. Where is the question of having both after that? And then 1470 for Fortune Pharma Limited. This is your pure demerged entity income. This is pure demerged entity income. There is no mix in this. Continue. Estimated market price of shares of Fortune Pharma is 24.5 rupee per share. This is the share price of the demerged entity. Average PE ratio in FMCG sector is 42 and in pharma sector is 25. By the way, it's a hint now. You have market price, you have the PE ratio, you can find out EPS, and you also have profit. From there, you can find out number of shares. Some reverse working are to be done. I repeat, they gave PE ratio here. Just above that, they gave you market price. From P ratio market price, you get earning per share. Total earning was there just before this. That means from there you can find out total number of shares. Because if you see the question, they gave everything in balance sheet except share capital. You do not know how many shares are there in these companies. Fortune India details, I think I have it in the first paragraph itself. They said 3,000 lakhs, but they haven't given anything about Fortune Pharma. This we need to work out with this information, which is to be expected to both the companies. That means the industry average is expected to be applicable for the companies also. Sub question A. You are required to calculate the ratio in which shares of Fortune Pharma Limited are to be issued to the shareholders of Fortune India Limited. That means they want you to work out the share exchange ratio. First of all, Fortune India, do we know how many shares we have? No, no, not 3 lakh, 3,000 lakhs. Hello? You have it in the first paragraph itself, third line, 3,000 lakh. My question, will this get impacted by demerger? Will this 3,000 going to move here and there? No, that 3,000 will continue. You are creating one more. For that new company, you will have to issue some shares to the shareholders of Fortune India Limited. That is the question, how many shares to be issued? Suppose after our working, if that answer comes to 1,000, that means exchange ratio will be 1:3. You guys have 3 shares here. I'll issue 1 shares in the demerged entity. Now the question is, how do we get this? For this, we have to find out how many shares will be there in the demerged company, or rather, you get confused. How many shares are there in the pharma company? Now, tell me, how do we find out how many shares are there in the pharma company? You have pharma sector P ratio with you. Do you have pharma limited's market price? Sorry, I'm marking in blue to avoid confusion. You have P ratio, you have market price. With this, you can get EPS. They've also given total earnings. That means from there, you can find out number of shares. And then based on that, you can decide the ratio. Clear? Start. Question 11. If you want, then only this class note I've already explained. If you have understood this, if you do not make a note, I am totally okay. Fortune India Limited was the company. This is not part of main answer. Pharma division will become a separate entity. FMCG division will continue. I've given a small note. I explained this. If you have understood, then it's okay. If you want to make a note, please make a note. Assets and liabilities of Fortune India will be transferred to Fortune Pharma. That's why you call it demerger. But Fortune Pharma is not issuing shares to Fortune India. Company will not get any shares. The shareholders are going to get the shares, and we call it as spin-off. Is there anyone who was holding Vedanta Resource share last year when this happened? You would have received an email. Not yet. Are you still holding? Then you would have received at least a communication, the board resolution and all of that. Do you check that email which they gave to this is the problem. No, whoever is having a demat account, I know why you don't want to check every day. They keep sending emails, your margin, funds balance, this balance, that balance, but all your AGM notices, everything comes to that same email ID. At least once in a week, make it a habit. Dividend, everything, all information is there itself. It is sent from CDSL. At least that email you check. I know zero the email you don't want to check. They send by default every day. But at least CDSL emails you should check. Hero, please check today. You would have received some communication about this. This is what happens when you give right issue. Remember, do nothing. Potassium did nothing. Same people. You should check. Yes. Part A. Listen, this I discussed. How do we calculate number of shares now? You have MPS, you have PE ratio, and you have profit. From MPS and PE ratio, you can first work out EPS. From total profit with EPS, we can find out number of shares. I don't think what is there in this box is to be copied. You can directly start copying the numbers. Start first. Everybody, sub question A. How much is MPS of the pharma company? 24.5. You also have the PE ratio applicable to pharma company, 25. What is the formula? PE ratio is MPS by EPS. But I have MPS and PE ratio already. Now tell me, for EPS, will I do 24.5 by 25 or 25 by 24.5? Sorry? 24.5 by 25. If you're not comfortable with this, you write P ratio formula, left hand side, numerator, denominator, then substitute. Because you do mistake here, from all three sub questions will go wrong if exchange ratio goes wrong. 0.98 per share. And how much is the total earnings or profits that we are expecting? 1470. Now from total earnings with earning per share, we can find out how many shares are going to be there. EPS is total by number of shares. So 1470 by 0.98, 1500. Go to the question. Third line, second line. They've given Fortune India has 3000 lakh shares. This new company will have 1500 lakh shares. That means you will have to go by 1 share of Fortune Pharma for every 2 shares held, or you can write it as 0.5 is to 1. 1 by 2 is 0.5 is to 1. In bracket, if you want, exchange ratio 0.5 is to 1. 0.5 is to 1. Yes. Please go to the sub question A. The ratio in which shares are to be issued, we answered. Sub question B. Expected market price of Fortune India Limited. Now Fortune India Limited is a pure FMCG company now, and I think we already had its profit numbers expected. Do we know number of shares? Do we also have their P ratio? I think we'll be able to do easily. Correct? And remember that 3000 will not get changed. The continuing company will not have any change in its shares. Again, this is only for your understanding purpose. We already have profits. We know their number of shares and we also know their PE ratio. From total profit with number of shares we get EPS. From EPS PE ratio we can get their MPS. I think easy to understand, so you can directly put the numbers. Say sub question B, start. How to do? What are the profit figures now? 11400 to be divided by how many shares? 3000. You know the mistake that some students are going to do, denominator they won't take 3000, they'll take 3000 plus 1500 lakh shares of Fortune Pharma that we are issuing. I already told you pharma company will not issue shares to Fortune India company, they're issuing it to the shareholders of Fortune India company. These people have different PAN numbers. Shareholders PAN number is not equal to company's PAN number. Easy way to understand. So 11400 divided by 3000, that will give you EPS of 3.8. And I think you already have P ratio of FMCG sector 42. If you just multiply 3.8 into 42, approximately 159, 160 rupees. Done. I want your explanation to sub question C. Yesterday we made a note of something. Book value per share. When they say book value per share in finance, it's not just share capital plus reserve of both the companies after demerger. That means they want Fortune India separate number, Fortune Pharma separate number. But the problem is if you go to the available balance sheet, it's not a balance sheet, it's extract of balance sheet. I do not have share capital plus reserve. I cannot do share capital plus reserve divided by number of shares. Then tell me, how do I approach this? Let's start with the bigger company first. Tell me how to approach Fortune India number. I quickly repeat, when I say book value, I'm talking about share capital plus reserves. Correct? And last sub question says book value per share. So I'll have to divide by number of shares. Anyway, number of shares I know 3000 here, 1500 here. But I don't have share capital plus reserve. Then what is the way? I can come from the other route, total of the asset side minus all the liabilities. Tell me Fortune India Limited, how do I get those numbers? I don't want numbers in calc. Tell me what all you want to add, what to minus. Sorry sir. Are you saying we should add all of this? Blue circle. So this minus this number, that will be the FA of Fortune India. Like this you will take all of this and this will be all assets, and same way you will do this minus this, that will be the liabilities. Correct? This will be total asset minus external liability. This number whatever you get, you will divide by how many shares? 3000. Okay, what will you do for Fortune Pharma? Whatever you minus here will be their number, or you already have it here, the total of all FS minus the liabilities, that to be divided by the number of shares. Remember, ultimately what you need in the T form of balance sheet, you need share capital plus reserve. If you don't have these two, then the total of asset minus all external liabilities should also give you the same answer. The mistake that many do is they take these numbers as it is. This was, I think you have written on 31/3 before demerger. Correct? But the question is not before demerger. Question is after demerger. After demerger, they will not be holding 2400 worth FA. In that 7740 is taken over by them. And luckily they said all assets are transferred at book value. So you don't have to do any other adjustment. Remember, can you recall this internal reconstruction discussion? They say creditors have decided to forgo 25%. That means you're doing revaluation. Land will be done land is upward revalued, inventory is downward, some are written off. There's it saying none of that is happening. That means all that is there in the balance sheet as it is, you can take it in your calculation. Yeah, today we have one sum on internal reconstruction. That time you will see you cannot copy the number as it is, you will have to copy the revalued number. And remember, whenever you do this revaluation, there is some gain or loss, and you either take it as capital reserve or goodwill, depending upon which side is more. Luckily in this question they said everything is at book value. Start. Sub question C. Just write a class note, it's not there on slide. Write a class note. Book value per share is equal to small formula style, share capital plus reserve divided by number of shares. Share capital plus reserve by number of shares, full stop. But we do not have share capital plus reserve data in the question, full stop. We need to solve in asset root. We need to solve it in asset root, that is total asset minus outside liabilities. Yes, I need your help in Calci. Tell me first, for Fortune India in Calci, please. I can first add all of this. I want you to do not write first, please. I'll give you full slide later to copy. In Calci, 2400 plus 12300, 3200, 7300, minus 200, minus 3000, minus 800, minus 21200. This, what's the number? 45,000. Is it before demerger or after demerger? Before, but question is not before, question is after. That means out of this I have to take out whatever is the net asset taken over by Fortune Pharma. In the same manner in Calci, please do that. 7740 all assets and then minus the external liabilities. Is that coming to 21,000? That means post demerger, your Fortune India, an independent company, will now be having 45 minus 21, 24,000 lakhs. And how many shares they have, by the way? 3,000 lakhs. That's not going to change. No confusion? Huh. Therefore, this will be 24,000 divided by 3,000. This will be 8. Now, the reason why I did 45 and 21 separately, it becomes easy now for you to answer Fortune Pharma. See this on screen. Book value per share of Fortune Pharma will be that 21,000 which is taken over divided by 1,500. That will be 14 rupees. Done. Copy. W still